Luxury once carried an implicit promise of permanence. A visit to a boutique was not merely a shopping trip but a ritualized exchange. Money for certainty, cost for continuity, fashion for something that time itself would respect. Few names embodied that expectation more convincingly than Chanel. For decades, collectors repeated a quiet rule with near mathematical confidence: purchase a classic flap and the value would follow, almost like depositing currency into a leather-bound vault. The logic felt reliable because historical performance reinforced it. Chanel bags retained a large percentage of retail value and frequently appreciated after price increases. A pattern documented repeatedly in secondary market studies across the 2010s. Yet somewhere in the early 2020s the tone of the conversation began to shift. Not dramatically at first, but gradually, then visibly, and eventually publicly. By 2025, collectors, resellers, and analysts were asking a question that once felt unthinkable: was Chanel losing its investment certainty? The change did not originate in resale platforms but in boutiques. Chanel has always adjusted pricing, controlled increases historically aligned with material cost, craftsmanship, and inflation. That pattern reinforced trust because rising retail strengthened resale. However, between 2019 and 2024, the classic flap's price nearly doubled in several markets, moving from the mid-$5,000 range toward and in some cases beyond $10,000. Initially, collectors celebrated. Higher retail historically elevated secondhand value. Existing owners appeared wealthier overnight. Yet economics depends on equilibrium. Prices rise sustainably only when buyers believe quality rises alongside them. The acceleration era disrupted that alignment. Reports began circulating of inconsistent stitching, uneven quilting, fragile leather finishing, and hardware wear appearing earlier than expected. Individual complaints do not define a market, but frequency alters perception. When luxury clients start inspecting rather than admiring, value psychology shifts, and resale value depends as much on confidence as on cost. The secondary market functions as an objective mirror. Retail communicates intention. Resale reveals consensus. Chanel historically ranked among the strongest performers, often retaining roughly 80 to 90% of retail value depending on model and condition. More recent observations suggested divergence rather than collapse. Vintage Chanel, particularly pre-2018, remained highly desirable, while newer production years required more scrutiny from buyers. Manufacturing year became a screening factor alongside leather and hardware. That inversion matters because luxury traditionally equates newer with better. When newer becomes uncertain, liquidity decreases. Analysts noted that aggressive retail increases without corresponding perceived quality improvements can slow transaction velocity in secondary markets because buyers become selective rather than immediate. Hesitation rarely produces dramatic price crashes. Instead, it produces softening, fewer impulse purchases, and narrower resale margins. Psychology amplified the shift. Chanel historically positioned itself as attainable prestige, aspirational yet reachable. Moving prices into the range traditionally occupied by ultra-exclusive houses altered expectations overnight. When an accessory approaches the cost of durable goods such as vehicles or long-term electronics, tolerance for imperfection disappears. Consumers began comparing stitching density, leather aging characteristics, and hardware durability across brands, often through detailed visual documentation online. Social media created an unintentional archive. Lambskin from earlier decades beside recent releases, plating thickness across eras, quilting symmetry across batches. Luxury mythology depends partly on continuity, the belief that heritage remains unchanged. Documentation revealed nuance, and nuance changes perceived certainty. The result produced what analysts describe as a resale paradox. Price increases usually raise secondary value because replacement cost rises. However, replacement cost only supports resale if demand urgency remains constant. Around 2025, the market bifurcated. Vintage Chanel appreciation strengthened while certain new pieces fluctuated depending on model and production period. Classic flaps retained strong positioning overall, but seasonal designs showed variability, occasionally appearing on resale platforms shortly after purchase and sometimes below boutique cost, historically uncommon behavior. Oversupply combined with high retail cost can compress margins, because buyers feel less urgency to purchase immediately, especially when alternatives exist. The category did not collapse. It began behaving less like a fixed store of value and more like a collectible subject to preference cycles. Transparency accelerated this transition. In earlier decades, luxury houses controlled narrative through limited public comparison. Digital communities now analyze production details collectively. Consumers effectively became archivists, mapping manufacturing variations across years. Once differences become documented, mystique evolves into measurable comparison. Value becomes contextual rather than universal. Chanel's desirability remained intact, boutiques continued selling out popular colors and celebrities continued carrying the brand daily, yet the certainty surrounding value retention narrowed. Before 2020, the purchase symbolized fashion combined with predictable stability. By 2026, it symbolized fashion combined with conditional stability. Investment-like assets depend on predictability. When buyers must research batch variations or production periods, the object behaves less like a bond and more like a collectible. Collectibles can appreciate significantly, but they fluctuate based on knowledge and timing. Macroeconomic factors reinforced this pattern. During periods of inflation or market volatility, luxury resale typically grows because consumers prefer tangible assets. However, buyers become more analytical. Durability and longevity influence purchasing decisions more strongly than branding alone. If customers believe earlier production lasts longer, earlier production becomes the safer choice. That dynamic explains why vintage Chanel appreciation strengthened while newer production displayed variability, not decline but divergence. Collectors gradually adapted their language. A practical rule emerged: vintage Chanel for investment logic, modern Chanel for aesthetic enjoyment. Such a distinction would have seemed unnecessary a decade earlier, when the brand satisfied both motivations simultaneously. The brand itself did not lose prestige, it lost uniform predictability. Predictability created the savings account reputation, because buyers trusted value preservation regardless of purchase year. Once preservation became selective, buyers evaluated rather than assumed. Some analysts interpret this not as deterioration but repositioning. By raising prices significantly, Chanel moved closer to ultra-luxury positioning similar to scarcity-driven houses, whose desirability depends less on resale and more on status signaling. Transition periods often produce temporary resale instability because expectations lag behind pricing strategy. Consumers still remember earlier price-quality alignment while encountering a new pricing tier. Markets frequently wobble during such adjustments. In this context, resale value is not uniformly falling, it is fragmenting. Certain leathers and classic constructions remain resilient. Limited colors maintain stability. Earlier pieces experience renewed appreciation. Blanket confidence, the idea that any Chanel purchase guarantees financial preservation, diminishes. And that psychological change matters more than percentage variations. Prestige depends on belief. When buyers assume value retention, negotiation disappears. When buyers evaluate, negotiation returns. The irony lies in time's altered role. A brand associated with timelessness now faces year-specific discussions: pre-price increase, pre-factory change, pre-specific production era. Time transforms from ally into variable. Variables create markets. Markets replace myths. Future outcomes remain open. craftsmanship adjustments could restore universal confidence, realigning price and perception. Alternatively, the brand may continue evolving into a primarily aesthetic purchase rather than a hybrid aesthetic financial one. Both paths represent commercial success yet attract different consumers, analytical buyers guided by data versus emotional buyers guided by style. For decades, Chanel appealed to both simultaneously. Currently, balance shifts toward emotional consumption with analytical segmentation. The intensity of online debate reflects more than stitching concerns. Buyers once purchased reassurance that beauty and rational value could coexist in a single object. When the rational component becomes conditional, discussion intensifies. The broader luxury sector may be entering an era where brand name alone no longer guarantees appreciation. As information increases, evaluation replaces assumption. The market does not weaken, it matures. The essential question, therefore, is not whether Chanel is failing but whether automatic luxury investment thinking is ending. When consumers research before purchasing rather than trusting inherited reputation, luxury returns to its original nature, deliberate choice rather than financial substitute. The handbag becomes expression first and asset second. In that sense, the narrative may represent evolution rather than decline. Understanding shifts like this reveals how culture and economics intersect. Objects acquire value not only through materials but through collective belief sustained over time. When belief adapts, value adapts. The Chanel story illustrates how prestige markets behave under transparency and changing expectations, a reminder that even icons operate within psychology as much as craftsmanship. If this exploration of fashion, finance, and human behavior added perspective, continue the conversation. Subscribe and stay with the series, because the next object that looks purely aesthetic may quietly be shaping an entire economic narrative behind the scenes.